Hello, I'm Carol Alexander, and I'm convening the third year module in financial risk management in the business school at Sussex University. And I am now recording the first of several videos for topic 1, the introduction to financial risk management. There are 8 topics, and each topic will have several videos so that you can watch them in short chunks. So, the first topic is divided into 3 parts. What is financial risk management, financial assets and instruments, companies and institutions in financial markets. For many of you, at least sections 2 and 3 will be revisions of earlier modules that you've taken in finance, but not for everyone, because some students are majoring in subjects like economics or mathematics. What is financial risk management? Well, as many of you might also think of, I thought I'd put it into ChatGPT. Why? Because this module is integrating generative AI into its teaching and assessments. That's why you're watching videos before the in-person lectures, and during the in-person lectures, I'm going to show you how I play various large language models. And I really mean play, because it's a bit like playing an instrument. Just because you've got a wonderful Steinway piano, it doesn't mean to say that you can make a nice sound. You also have to have the music. That's like instruction. Anyway, I won't go into too many details about using AI at this stage. I just want to show you what happens if I put a vague question like that into ChatGPT. So what I got back immediately, I mean, within a second, was this and this and this. So just to break that down, I get a paragraph that is quite a long sentence with lots of adjectives, which is easy to understand if you already know the answer. But as a way of learning, teaching from bottom up, particularly at the undergraduate level, I find it rather obscure. So I'm going to contrast the way that you learn when you use generative AI like ChatGPT with the way that I teach in these videos, which is very, very different. I haven't really changed the lecture notes much since integrating AI in the module. So you'll get the original explanations, and then later on we'll show you how to use AI in the context of this module, but also for anything else you want to learn. So the first paragraph just says what it is. It's about mitigating, managing risks associated with financial things, assets, liabilities, financial operations. So immediately it's got a sort of accountancy speak there, assets and liabilities. Anyway, because we'll be focusing on the analysis side, there are lots of entry-level jobs still not taken by generative AI, particularly for students who know about financial risk analysis and can use GPT to leverage themselves so that they're super productive. And that's the sort of student I'm trying to educate. And then they talk about the factors, which don't actually include the most important factors. Market volatility as a risk factor is only a factor for options. We'll understand that later on. So there's a little bit of confusion about definitions. And then the goal of financial risk management: to minimize the potential negative impact of these risks on an organization's financial health while maximizing potential gains or opportunities. Actually, that's wrong. That's the goal of portfolio management. Financial risk management just focuses on risk. To that extent, it's easier than portfolio management, which also needs to look at expected returns. Things like risk-adjusted, Sharpe ratios, and things like that. But we're only going to be focusing on the risk side. So not only is ChatGPT such high-level language, it's also wrong, but only wrong insofar as a real expert knows it's wrong. You probably wouldn't know that that was wrong. And then the definitions of risk here. Market risk, credit risk, we'll be focusing on those. And then liquidity risk, yeah, we will mention that. It's in the book that I recommend, not that you necessarily need to read any books. As long as you watch the videos and come to the lectures and workshops and do the work that we set you, everything is self-contained. You don't need to read in this module. Operational risk, yes, that's a very well-recognized risk, particularly after the Two Towers attack in 2001. The terrorism attack there obviously had a huge effect on financial markets. Regulatory compliance risk and reputational risk, to me, are really part of operational risks. Operational risks are all the non-financial risks. Really, there are three basic types of risk: market risk, credit risk, operational risk. But then there are other important ones like liquidity risk and basis risk, which are a form of market risk, but so specialized they sort of deserve their own categories. Just as in credit risk, you might distinguish between default risk and credit migration risk. This is all about topic 2, so I won't go on too much about that. But in market risk, there are lots of subcategories of market risk as well. Techniques for managing financial risk. Well, hedging is something we're going to be focusing on, hedging with futures, hedging options portfolios if you're one of those rocket scientists who writes a book of options. That's the sort of top job for a trader. Diversification if you're a portfolio manager, spreading investments across uncorrelated asset classes. Stress testing if you are a risk analyst, that would be part of your day-to-day job, will be to think of scenarios that could incur a lot of losses and roll them out and see what if scenarios in the worst possible case. Risk transfer, we're not going to be talking about that. That's for insurance, transferring risk to another party. We will be discussing capital reserves and the Basel Accords for banks. That's in topic 8. Anyway, to wrap up the GPT answer to that very short question, it says, effective financial risk management is critical for organizations to ensure that they can navigate uncertainties and maintain profitability and solvency in the long run. Quite a mouthful. And what is solvency? Do you know? Not everybody in this audience will know what solvency means. And it's just a load of blah, blah. It's not the sort of thing that is easy to learn from unless you learn how to use GPT effectively. Putting in a short prompt, which is very few what we call tokens, and getting out lots and lots and lots of words, most of which you're just going to skim over and think, oh, that's not relevant, is not only token inefficient, means that the GPT runs out of so-called memory and then gets lost. It's also a waste of energy with all these data centers having to churn out so much. Okay, so that's the end of my first recording, and I will meet you in the next one. Bye-bye.